Waiting for the market to recover may seem like a safe decision, but that's how big opportunities slip away. While most people hesitate, some investors are taking advantage of the decline to buy stocks with huge potential for appreciation. And the strangest thing is that these companies are still flying under the radar. Right now, 5 specific stocks are trading at prices that may never be repeated. And when the market recovers, whoever has these stocks in their portfolio may be in a privileged position. Before revealing which ones they are, a quick reminder. Leave a like if you enjoy straightforward, no-nonsense content, and subscribe to our newsletter to receive the next moves that no one is talking about. Now then, let's talk about the 5 stocks that could soar even during the crisis. Everyone wants to invest in the fund, but the bottom itself is only visible after it has already passed, and that is precisely where the danger lies. Waiting for a perfect signal makes many people miss the most profitable moment. While ordinary investors are in groups, forums, and social networks asking, "Is it time to get in yet?" the big players are already in. Silently, buying in bits and pieces, taking advantage of every piece of bad news as another reason to reinforce their position. Why? Because they know something that many people forget. The market does not sound a siren warning when it is going to start rising. It simply rises, and usually when no one is paying attention. Want proof? Look at the data from the last 20 years. In practically all the big drops, the biggest gains came in the first 3 to 6 months of recovery. Not later, not when everything already seemed safe. And here is a fact that many people ignore. Missing just the 10 best days of the stock market over the course of a decade can reduce the total return by half. That's right, only 10 days. And guess where these days usually appear? Right after the most chaotic moments. In other words, those who wait too long pay dearly. And this is not about being reckless. No one is saying to throw everything into random stocks and hope. What we are saying is, the best opportunities arise when most people are paralyzed. Today, companies with solid balance sheets, growing profits, and expansion plans are trading shares below book value. Not because they are in crisis, but because market fear has brought everything down together. This is the moment when smart investors separate themselves from gamblers. And do you know why? Because gamblers are always waiting for the next guess, the next confirmation, the moment that seems perfect. They want guarantees, total security, but the market doesn't operate in that field. Meanwhile, real investors look at the scenario through a different lens. They know that big profits require temporary discomfort. They know that the most uncertain moments are often the most fertile for growth. Perfect timing seems like a rational plan, but in practice, it's a trap. It's like chasing the sunset. The longer you wait for the ideal scenario, the further away it becomes. And here's a provocative thought. The best opportunities don't shine, they scare. They appear wrapped in bad news, in generalized declines, in negative headlines. And that's why few take advantage of them. It's not because they don't see it. It's because they don't have the courage to act when all the signs seem to say otherwise. The right question was never, when is the best time to get in? The question that really matters is, will these stocks still be cheap when everything seems safe? And you already know the answer. They won't be, because the market doesn't wait for anyone. When institutional money starts flowing in again, prices rise faster than the headlines. And those who hesitate, who wait for that final confirmation, end up paying more or simply being left out. It's like going into a store and seeing that rare sneaker for half price, but deciding to think about it for a while. The next day, it's gone. All that's left is regret. So the choice is clear. Get in amidst the noise with strategy and a cool head, or get in later when everyone else is already in, and the profits are gone. Remember the 2020 crisis? The headlines screamed panic. The forums were full of catastrophic predictions, and everyone thought the world was going to stop. But in the meantime, some were buying, quietly, coldly, without the spotlight. Amazon, Apple, Tesla, companies that fell along with the rest, but that had something essential: unshakable fundamentals and a long-term vision. What happened next? Months later, these stocks soared. Tesla, for example, multiplied more than 10 times in less than 2 years, not because anyone accurately predicted the future, but because some knew how to look beyond the chaos. Now, in 2025, the scenario is different, but the pattern is frighteningly similar. Stock markets fluctuating, fear in the air, negative headlines, but the fundamentals of many companies remain strong. What has changed is the perception, not the real value. And that is where the secret lies. Fear is one of the most valuable assets for those who know what they are doing, because it brings down the prices of good companies along with the bad ones. It mixes everything in the same bag and creates a field of distortions where valuable assets are treated as trash. And it is in this field that the greatest profits are born. The difference between those who get rich and those who watch is simple: courage with strategy. It is not about acting on impulse. It is not about going out and buying anything because it is cheap. It is about identifying where panic has created a gap and acting coolly while most freeze. And here is an uncomfortable truth. The quickest fortunes are not made when everything is going up. They are made when everything seems to be falling apart. Do you know what many American billionaires have in common? They started their fortunes in the middle of crises. Warren Buffett? He took advantage of massive drops to buy cheap. Who is Howard Marks? An expert in navigating uncertainty. John Paulson? He made billions betting against the real estate market, while everyone thought he was crazy. But this is not exclusive to those with billions. Ordinary investors also have access to these opportunities. What changes is the level of preparation, the ability to see value where others only see panic. And that is why this video exists. Now, we will show you 5 stocks that not only have real potential for appreciation, but that are, at this very moment, being ignored or undervalued. Companies that could become the next big names and that are being offered at a fire sale price, simply because the market has entered fear mode. First action. The company will be revealed later as Company A. Imagine a company that is at the center of an absolutely indispensable sector, the kind of business that continues to operate even when the world is in chaos. It is not a fad. It is not a passing technology. It is critical infrastructure for the functioning of the modern economy. This is Company A. It dominates a significant portion of the market, with long-term contracts, predictable revenue, and a stable cash flow even in times of recession. Its business model is so resilient that, even when profits fall in other areas of the stock market, it continues to distribute dividends regularly. But here comes the detail that makes all this even more interesting. Its shares are discounted by more than 25%. And not because of poor results, mismanagement, or scandals. The fall came because the entire sector went into a herd panic. Investors' fear brought down even good companies. And this opened a rare window. While retail investors sold in fear, large funds did the opposite. They bought more, but without fanfare. Recent reports show that institutional holdings are quietly increasing their positions. This in itself is already a sign. Large players do not throw money at something unstable. They invest where they know the return will come over time. Another point that draws attention: the price-earnings ratio is below the average of the last 10 years. This indicates a distortion. The market is pricing this stock as if it were high risk, but the numbers say otherwise. And there is more. Projections for the next 5 years show continued growth in revenue, margin expansion, and new strategic acquisitions that should further boost the company's value. We are talking about a stock that can double in value based only on a return to the historical average of valuation, without taking into account future growth. And for those who like passive income, this company has paid stable dividends for over a decade, even during crises. In other words, while the price is rising, investors can still be paid to wait, Today, it is trading at less than $35 per share, and anyone who manages to get in at that level can soon look back and say, "I bought when no one else dared." Second action: innovation in times of crisis. This is the classic invisible company, the one that stayed under the radar while everyone was only looking at big techs. But behind the scenes, it did something impressive. It grew 35% in revenue in the midst of economic turmoil. While the giants were trying to maintain what they already had, this company was expanding, closing new contracts and gaining market share. The reason? 3 words: highly scalable model. It built a lightweight, flexible structure that was prepared to grow without relying on an army of employees or massive investments in infrastructure. But it doesn't stop there. It is positioned exactly where the new money is going: artificial intelligence. While many companies talk about AI as a future trend, this one is already delivering real solutions with practical applications, especially for public institutions and strategic sectors. And here comes the trump card that almost no one noticed. It closed multi-million-dollar contracts with government agencies. This means guaranteed, predictable revenue with a very high degree of confidence. It's not hype, it's stable revenue. These contracts not only protect the company against market fluctuations, but also serve as a seal of credibility. After all, when governments sign with a tech company, it's because they've gone through a rigorous selection, security, and trust process. And even with all this, the valuation is still surprisingly modest. Analysts still treat this stock as a promise, but the numbers already scream reality. The stock is being traded in the range of $22. And here's the most interesting point: it doesn't need a mega euphoria for it to double. The market just needs to wake up to what it's already delivering. We're facing the kind of opportunity that months later people look at and say, "How did I not see this before?" But it's still flying under the radar. No headlines, no exaggerated hype, and that's exactly why the current moment is so precious. Whoever positions themselves now can catch the appreciation curve from the beginning. Instead of chasing the next big tech, perhaps the smartest move is to spot the next big tech before it is recognized as such. This could be it. In the midst of the storm, there are companies that act as beacons. They don't shine with incredible promises, but they offer something that, in times of uncertainty, is worth its weight in gold: real stability. This is Company C. It operates in a sector that is, at the same time, urgent, strategic, and inevitable: renewable energy. While many still treat sustainability as a future concept, this company is already firmly in the present, generating clean energy, delivering results, and establishing long-term partnerships. And most importantly, it continues to make a profit even with the market in decline. This is because more than 80% of its revenue comes from fixed supply contracts lasting more than 10 years. In other words, it already knows how much it will receive, month by month, for a decade, regardless of market volatility. These contracts are mostly with large industrial conglomerates and regional governments, which are committed to energy transition goals. In other words, demand is not optional. It is mandatory. Meanwhile, governments continue to pump billions into tax incentives and subsidies to accelerate the sector's expansion. This company is uniquely positioned to capture a huge slice of that pie. Another point that few realize is what it does with its profits. More than 60% of its net profit is reinvested in new projects, including solar plants, wind farms, and state-of-the-art energy storage solutions. In other words, it is growing from within, increasing its generation capacity and, consequently, the intrinsic value of each share quarter after quarter. Even so, the market is still pricing this stock as if it were just another in the sector. Trading below $40, it is being treated as if it were a risky bet. But the numbers tell a different story: stable margins, debt under control, and accelerated organic growth. And the most interesting thing: this is the typical stock that institutional investors use as a portfolio anchor. It does not need to skyrocket 200% in 6 months. Just keep growing consistently while distributing dividends and accumulating value. If the market worsens, it remains solid. If the market improves, it accelerates along with it. Crisis or not, this is a position that protects and rewards. And sometimes true growth doesn't come from adrenaline, but from consistency. Fourth, stock. In the world of investing, what's out of the spotlight is often more valuable than what's in the spotlight. And this company is a perfect example of that. For years, it was considered one of the key cogs in the modern financial system. It developed solutions that allowed millions of people to make payments with a simple tap, and helped businesses of all sizes get paid online long before it was a global necessity. But, as with almost every established company, there came a time when it stopped being trendy. The spotlight shifted to startups with inflated valuations, bold promises, and rapid growth. The old giant? It was forgotten in the corner. But here's the thing. It never stopped delivering results. The user base kept growing. The infrastructure was modernized. Profits remained consistent. And, most surprisingly, even with the stock down more than 30%, trading volume increased 18% in the last 12 months. This is the kind of divergence that smart investors love to see. Cheap stocks, while the company is actually improving. Behind this movement is a silent but powerful plan. Over the past 2 years, this company has been rebuilding its digital ecosystem to serve small and medium-sized businesses with a more aggressive, more accessible value proposition that is better adapted to the new economic reality. It is integrating artificial intelligence to prevent fraud in real time, creating open APIs to make life easier for developers, and establishing new partnerships with digital banks and e-commerce platforms. What was once a traditional payments company is transforming into a complete platform for financial solutions. And while all this is happening, executives who know the inside story like no one else are buying shares on the open market. It's not just one purchase or two, it's several, consistent. This type of movement is often more revealing than any official statement. These insiders are not just optimistic, they are betting big, with their own pockets. And the current price, less than $28 per share. In a market where companies that barely generate cash are being traded at absurd multiples, this consolidated giant with real profits and silent growth seems like a real gift for those who see beyond the noise. In addition, there are rumors in the market that it may be on the radar of large private equity funds or even be the target of strategic mergers or acquisitions in the coming quarters. If this is confirmed, the current price will seem like a distant memory, and a cheap one. This is one of those companies that, a year from now, many people will look at and say, "How did I not see this before?" But until then, those who did have already profited. Last action. Every crisis carries an invisible pattern. When panic takes over, investors run to the same places. They get stuck in familiar names, ignore the new, let fear guide every click to buy or sell. And that is precisely where the real opportunities hide. This company, which we will call Company E here, is in this exact blind spot, and this may be the best news for those with strategic vision. We are talking about a small but extremely promising biotech that has just taken a giant step: the approval of an unprecedented treatment for a disease that affects more than 12 million people in the United States. This new drug acts more effectively and less aggressively than current alternatives, with fewer side effects and a surprising success rate in Phase 3 clinical trials. This alone would be enough to put the company on the radar of institutional investors. But the story doesn't stop there. This drug is expected to be launched on the market later this year, with a distribution plan already agreed with large hospital networks. And the estimated revenue? More than $800 million in the first commercialization cycle. Even so, the shares remain below $15, reflecting the market's fear, not the company's real fundamentals. But what sets this company apart from so many other promising biotechnology companies is the following. It is not a bet on a future idea. It is already executing. The production infrastructure has already been expanded. The sales team has already been hired. The CEO and CFO have been buying shares on the open market. These are not words, they are actions. They know what is about to happen. And what's more, its portfolio goes beyond this single drug. There are 2 more products in Phase 2 of clinical trials, with extremely positive preliminary results in diseases such as lupus and multiple sclerosis. If one of them passes and the chances are real, the potential appreciation is not 2x or 3x, it is 5x or more. We are looking at a company that can change the game in the health sector and, even so, is flying under the radar. It's the kind of opportunity that only appears to those who are looking in the right place when everyone else is distracted. And perhaps the most interesting fact is this. A fund specializing in biotechnology based in Boston increased its position by 280% in the last quarter without making a fuss. They know that the game will not be decided by hype, but by quiet execution. The question now is, when the market wakes up, will you be in, or will you run after the losses? Because at this moment, this company seems small, but everything about it screams, too big to ignore. Take a close look at this scenario. 5 companies, 5 different stories, different sectors, unique strategies, but one thing in common. They are not only surviving the crisis, they are preparing to emerge from it stronger. While the market drags on, these stocks are being priced as if the world were ending. But behind the negative headlines and red charts, there is movement. There is growth. There is a long-term vision. And here is a truth that not everyone wants to hear. The biggest gains of your life will probably come from decisions you made when you were afraid, because it is easy to invest when everything is going up. It is comfortable to get in when the analysts say, now it's going to happen. But the investors who really build wealth, the ones who are ahead of the charts, not behind, are the ones who understood one simple thing. The right time is not when everything is clear. It is when everything still seems confusing. These 5 stocks represent that. They fell with the market, but not because of weakness. They fell because fear is collective. But the recovery will be selective and fast. And no, none of them come with a guarantee. But let me tell you what also doesn't come with a guarantee. Standing still. Waiting. Freezing. Missing opportunities while time passes. If there's one thing that the history of the market has always taught us, it's this. Those who wait for the perfect moment usually only realize it exists when it's too late. So now it's up to you. Tell me in the comments, which of these 5 companies caught your attention the most? Or maybe you have another hidden gem on your radar? Share it with us because here at Camino do Sucesso, collective intelligence is also worth its weight in gold. And if this content opened your mind, gave you direction, or simply made you think differently, like it, subscribe to the channel, activate the bell, and get ready. Because in the next videos we'll put together a complete portfolio to grow even when the world is falling apart outside. Because those who understand the game don't wait for the whistle. They're already on the field. See you in the next video, and until then, happy decisions.